For a long time, the Iraqi dinar story has been associated with waiting for reforms, waiting for modernization, and waiting for signs that Iraq's currency system is aligning with how money actually moves in the modern world. Today's discussion matters not because of hype or dramatic claims, but because it highlights a structural shift that could meaningfully change how the dinar functions. This is not about instant outcomes or guaranteed results. It is about infrastructure access and real-world usability. As we move closer to 2026, there are concrete developments that deserve careful attention. Welcome back to Iraqi Dinar News Update. Our focus here is verified information, economic context, and realistic analysis. In this video, we're breaking down what the digital transformation of the Iraqi dinar could mean, how integration with global payment platforms fits into that picture, and why functionality and credibility matter just as much as exchange rates when evaluating a currency's future. For many years, one of the most limiting factors for the Iraqi dinar has been practicality. Physical currency and traditional banking channels made international use slow, expensive, and inefficient. Transfers often required multiple intermediaries, high fees, long processing times, and limited accessibility. In a world where money increasingly moves digitally and instantly, this structure placed the dinar at a disadvantage. What is changing now is not the identity of the dinar itself, but the system surrounding it. Iraq's financial institutions and monetary authorities have been working toward digitization as part of broader economic modernization. Digital currency infrastructure does not replace the dinar. Instead, it allows the dinar to operate within modern payment systems that dominate global commerce today. Digital integration means the currency can function beyond physical notes. When a currency is usable through recognized digital platforms and peer-to-peer systems, it becomes easier to store, transfer, receive, and track. In practical terms, this allows people and businesses to interact with the dinar in the same digital environments they already use for everyday financial activity. In today's economy, cash plays a smaller role each year. Payments are handled through apps, online platforms, and digital wallets. Businesses rely on fast settlement, individuals expect quick transfers, and cross-border payments are increasingly digital. Currencies that cannot participate in this ecosystem face structural limitations regardless of their nominal value. Peer-to-peer functionality is a key component of this shift. P2P systems allow users to send funds directly without relying on long banking chains. This reduces delays, lowers costs, and improves transparency. For individuals sending money to family members, this means faster access and fewer deductions. For businesses, it means improved cash flow and reduced friction in daily operations. The impact on remittances is particularly important. Iraq has a large population living abroad, and remittances play a vital role in household income and national inflows. Traditional remittance services are often costly and slow, reducing the amount that reaches families. Digital transfers improve efficiency by shortening settlement times and minimizing intermediaries, allowing more value to reach recipients. For Iraqi businesses, digital dinar functionality supports participation in global commerce. Accepting international payments becomes simpler when transactions can be processed digitally and settled quickly. Small and medium-sized businesses benefit from lower barriers when accessing global markets. Digital payments also support clearer accounting, better records, and more predictable financial management. Consumers benefit as well. The ability to pay for online goods and services using local currency expands choice and convenience. It integrates domestic users into global commerce without constant conversion into foreign currencies. This two-way participation strengthens economic engagement and normalizes the use of the dinar in digital environments. Security is a valid concern whenever digital finance is discussed. Established payment platforms operate under regulatory oversight and use advanced safeguards such as encryption, multi-layer authentication, and fraud monitoring. Digital transaction records also improve transparency, creating traceable histories that benefit users, businesses, and regulators. Transparency supports compliance, oversight, and confidence in the financial system. At the national level, digitization supports broader economic reform. Efficient payment systems make it easier for investors to operate, for companies to move funds, and for institutions to manage capital flows. These factors matter when evaluating a country's financial credibility. While digital integration does not guarantee changes in currency value, it strengthens the foundation that supports stability and trust. It is important to clarify expectations. Digital integration should not be confused with promises of immediate currency revaluation. Currency appreciation depends on economic fundamentals, fiscal discipline, institutional credibility, and long-term policy consistency. Digital infrastructure contributes to those fundamentals by improving liquidity, usability, and transparency, but it does not bypass economic reality. What digital integration does achieve is the removal of friction. A currency that is easier to use, easier to move, and easier to verify becomes more relevant in real economic activity. Relevance supports demand, and demand supports stability. These processes develop over time rather than overnight. Education is another essential part of this transition. Digital finance requires users to understand security practices, account management, and safe transaction behavior. Financial institutions and platforms typically provide guides, tutorials, and customer support to help users adapt. Increased financial literacy strengthens the system and reduces risk. Innovation becomes possible once digital foundations are established. Financial technology services such as budgeting tools, digital accounting, payment automation, and other applications rely on digital compatibility. As ecosystems grow, they attract talent, encourage entrepreneurship, and expand economic participation. Globally, many countries are pursuing similar modernization paths. Digital payments, regulatory upgrades, and financial transparency are becoming standard expectations. By moving in this direction, Iraq aligns with global financial norms and positions itself for deeper integration into the international economy. Convenience should not be underestimated. Fast settlement, reduced paperwork, and reliable access are now baseline expectations. When transactions that once took days can be completed in seconds, economic activity becomes more efficient and responsive. In summary, the Iraqi dinar's digital transition represents a structural development rather than a speculative event. Digital integration improves usability, accessibility, and transparency. It supports remittances, expands business opportunities, enhances consumer access, and aligns Iraq's financial system with modern global standards. This does not mean guaranteed outcomes or instant value changes. It means stronger foundations. Currencies are built on systems, not headlines. Digital infrastructure is one of those systems. For dinar holders, businesses, and observers, the key is awareness and understanding. Learn how digital platforms work. Rely on official sources. Avoid exaggerated claims. Focus on long-term mechanisms rather than short-term excitement. As 2026 approaches, these developments are worth watching because they reflect tangible progress in modernization. The Iraqi dinar story is evolving through infrastructure, policy alignment, and gradual integration into the global financial system. Stay informed, stay analytical, and stay grounded in verified information.